Today, we are talking about the Wakefit Innovations IPO. Wakefit is extremely popular in the sleep and home category, but popularity is not the question. The question we IPO investor ask is simple. Is this a real business opportunity or just the hype? Let's start from the beginning. Wakefit began in 2016, founded by Ankit Garg and Chaitanya Ramalinga Gowda. They saw a really Indian consumer problem. Indian consumers spend on mattresses, but they don't get the quality sleep because the middlemen make everything expensive. Wakefit avoided distributors, they avoided retailers, they went direct to customer, also known as D2C. No middleman, lower price, direct delivery. This transparency launched the brand. That was Wakefit's early momentum. Over time, Wakefit expanded. It became much more than mattresses. It became a home essential company. Mattresses, pillows, beds, wardrobes, tables, chairs, sofas, decor, complete product ecosystem. And India changed. The market moved to omnichannel. People browse online, but they buy after touching the product. Wakefit understood this consumer behavior of you and me. This answer is the COCO model. Sorry, the Wakefit's answer is the COCO model. Company owned, company operated. Every Wakefit store belongs to Wakefit. Inventory is Wakefit's. Staff is Wakefit's. No franchise, no dilution, no leakage of brand experience. This gives Wakefit control. Control over quality, control over pricing, and control over consumers' experience. Let's talk revenue mix. Mattresses are still the backbone. Almost half of revenue comes from mattresses. Furniture is the second pillar. It scales the brand with higher ticket prices. Home accessories are currently smaller, but Wakefit is expanding it aggressively. Now the IPO timelines. Bidding starts 8 December Monday, closes 10 December Wednesday. Tentative allotment is scheduled on 11 December Thursday. Tentative listing on 15 December Monday. The price band ranges from 185 to 195 per share. Retail lot is 76 sets. So at the upper band, minimum investment you and I need to do is 14,000 rupees, 14,820 rupees. The total issue size, 1,288.9 crore. Fresh issue out of that is 377.18 crore. Offer for sale is 911.71 crore. I mean, there could be minor last digit differences because of rounding off. Fresh issue goes to the company. OFS means early investors exiting, which is fair in my opinion, as I generally sell my IPO investment on day one, rather first hour of the listing. Where does fresh issue money go? COCO stores expansion. Over 50% of the money that you and I put in IPO goes there. Working capital, warehouses and supply chain, technology and marketing. So in my opinion, this is a growth strategy. Now the allocation. This IPO is institution heavy. QIB 75%, NII 15%, retail only 10%. This means simple. Listing moves with institutions, not with retail subscribers. Let's talk financials. Revenue financial year 2024, 1,017 crore. Revenue financial year 2025, 1,305, 1,305 crore. Demand is real, growth is clear, but profitability is weak. Or you can say bottom line is weak. Loss in the financial year 2024 is 15 crore, 15. Loss increased in financial year 2025 to 35 crore. Revenue up, loss is widening. This matters. Let's talk about competition. In the mattresses segment, Duroflex, Kurlon, Sleepwell, Sleepyhead, the sleep company. In the furniture segment, IKEA, Pepperfry, Nilkamal. Strong players, strong distribution, strong mindset. Wakefit must compete with these brands every single day. Risk. Number one, profitability. Losses are increasing. Number two, OFS. Large sell-off by existing investors. Number three, competition pressure. Margins will always be challenged. Now my verdict. I have personally investing in IPO for 35 plus years. Listing gains most of the time depend on QIB sentiment. I take it as a 70-30 rule, which I follow for any IPO investment decisions. If I'm right 70% of the time and book quick losses as well for remaining 30%, I will end up with big gains in the long run. Super aggressive approach. So it may not be feasible for everyone. You need not follow me on this approach. In other words, if institutional demand is strong, listing should be decent most of the time. Right now, GMP moved from 0 to 36. That is over 18%. But GMP is sentiment, not guarantee. On listing day, check the actual numbers. What I can do is I will post updates on the GMP and other details, including my final strategy across 2DP accounts at my Your Money Insights WhatsApp channel. I will share the link in the pinned comment and description box. Feel free to follow me. Disclaimer. This video is for education purpose only. It is not an investment advice. Consult your financial advisor before making any investment decisions. I'm Chetan Mitlani signing off. See you in the next video.